So we are taking a look at Tesla stock today, and there is a ton to cover in today's video, and so I highly recommend you guys to watch this video in its entirety, especially if you're trying to gain an understanding of what's currently going on with Tesla stock and what should you be aware of. As we're going to go ahead and touch on Tesla stock and break down some of the fundamental data. We're also going to take a look at Tesla from a technical perspective. We're going to cover some rolling economic data coming out and how that could shape the overall direction of the markets, as well as cover some catalyst events that we should definitely be aware of. And so as you can tell, we're not going to have a myopic perspective. We're going to actually have a multi-dimensional approach where we're looking at things from all angles. As I often say, you can't just get snippets of data and expect to understand what's going on. In order to understand what's going on, you have to think of the economy as a collage, and you have to understand each of its moving parts to really identify what's going on. And so what we saw for today is we saw Tesla stock actually close slightly lower than the trading session prior. Now we're going to go ahead and talk about the underlying reasonings on why we actually saw this price action, but also some other things that we should be aware of going forward with Tesla. Starting off with some news, I want to highlight this interesting article over here saying that Elon Musk says that auto unions' demands would bankrupt the big three car makers. Now, this isn't very far from what we've been saying on this channel for a few weeks now, that of course, this strike is not good for the legacy automakers, but it's actually providing an opportunity for Tesla. Now, if we go ahead and zoom down, we hear quote for quote or word for word Elon Musk saying that this would bankrupt these companies in the fast lane. Now, again, this is not far from what we've been saying. And we also saw, interesting enough, that President Joe Biden is endorsing the UAW's demand for a major wage increase during a visit to a picket line at General Motors. And so that's pretty interesting. I didn't think that we would have our president kind of agree with the UAW's demand, which could hurt a lot of these big legacy automakers that provide a lot of jobs for a lot of Americans. But I'm not going to go in too deep into that conversation, as that's a conversation for a different video. But I wanted to highlight this tweet that we saw from Car Dealership Guy. He's a great resource on Twitter. I highly recommend you guys check out his content. But he shared this chart over here saying, who will suffer the most from extended auto worker strikes? And then he shares this insightful chart where he says that GM is under most pressure to a strike deal versus Stellantis still has most of the breathing room available when you're comparing the auto legacy companies. Now, this is really just looking at the supply, and he actually on the bottom over here says that this chart displays the day's supply, which is a metric that's relative to demand. And so it's not absolute units, but it's pretty interesting that we're most likely seeing that Ford may hold up for a bit and Stellantis, but there's a lot of pressure on GM. But aside from the legacy automakers, I really wanted to highlight this article over here that I think you guys are going to find very interesting. Now, you guys know I like to look at things from multiple perspectives. I don't just like to look at what the bulls say or what the bears say. I highly believe that you have to have an understanding of what both sides are saying. And so this is some bearish news over here, or bearish piece over here, and it has some truth to it, right? So it has these 3 bullet points. It says that Tesla's domestic sales averaged only 52,000 a month since the elimination of COVID sanctions, but China's EV market is no longer growing rapidly, and this means that Tesla can't count on market expansion. Now, that found that pretty interesting. Now, the second bullet point is that European anti-dumping sanctions will eliminate about 25,000 units of monthly exports from Shanghai. Now, this is something we definitely want to be aware of. So what does this, European anti-dumping sanction really mean? Well, it refers to trade measures imposed by the European unions to counteract the sale of goods at a price lower than their normal value in their domestic markets, right? This is often called dumping, hence that's why it's anti-dumping, right? And so these sanctions usually involve levying additional duties on the imported goods to bring their prices closer to what is considered a, quote, fair market value. But in reality, is it really fair, or is it really just eliminating competition? Now, that's something that, I'm not going to really dive too deep into, but this is a concern for Tesla. Now, the third concern, and this is, I think, one of the most interesting concerns over here, is that the Tesla Model 3 refresh, which is the new Model 3 that's going to be rolling out in China and Europe, it says that it's not enough and that Chinese car review sites pan it as a minimal in extent and not worth the higher price, and that it won't increase sales. And so this is kind of like the sentiment that we're getting from these Chinese websites or these Chinese review sites, that it's not worth it to get the Model 3s. Now, we talked about in a previous video that the reason why we're seeing sales kind of decline in China is that maybe most of the individuals in China are holding off on buying the Model 3 so that they could buy out the new Model 3 refresh. However, this is kind of painting a different story, where in China, the sentiment is kind of like, hey, these new cars that are rolling out, well, they're not a big difference and it's not worth the prices. And so that was an interesting perspective to hear. But with that said, I want to really pan over to the technical sides of things. And then, of course, we're going to look at things from an economic perspective as well, as I think that's one of the most important things that I'll cover on later in this video. I think it's one of the most concerning issues right now taking place. But let's go ahead and take a look at Tesla, right? So let's go ahead and look at it from a daily time frame and actually look at this piece of data right over here. So one of the things I mentioned a multitude of different times in previous videos is that we're at this area where there's a lot of volume relative to price. And when there's a lot of volume relative to price, that means that there's a lot of exchanging between buyers and sellers, and that creates areas of consolidation and resistance and support. And so what we're seeing is that we broke below it recently. First off, we got rejected by this descending trend line that I've shared for a while, that has been a prominent descending trend line for Tesla, as we've seen Tesla get rejected a multitude of different times. And we saw that as Tesla was getting close, I put out a warning like, hey, we want to watch out for this area, and of course we ended up getting rejected. And then we broke below this area over here where I said, oh no, that's not good, because that means that we're approaching this area where there's a volume pocket where when we fall into that area, there's less of an exchange between buying and selling. And so if there is continuous selling pressure, well, it could pretty much have Tesla stock capitulate. But what we saw just the other day was the buyer stepped in, and we saw that because we see this candle wick over here. If you guys understand candles, which I have a separate video on this channel breaking that down, we see that this is implying that, hey, the bulls stepped in and they rejected this area from coming down. They saved the day. But I said that wasn't enough in the previous video, because we're still in this area where it's seen as a rejection area, as there's been an area where in the past it's been consolidation. We know that this is where all the exchanging takes place. And we saw today that you see this wick over here where Tesla moved up, but then it got rejected. Yeah, so it looks like selling took place at around over here. And so if that continues, if Tesla continues getting rejected, well, then that means that Tesla could continue falling downwards. But I want us to take a look at something else that I found interesting, and that is the 10-year Treasury. We saw it actually climb up today once again. Now, it did kind of trickle down towards the end of the day, but again, it climbed upwards. And I've often expressed to the Push and Profit private group a multitude of different times, but as well publicly on this channel, where when we have the 10-year Treasury climb up to levels that we have not seen from 2007, well, this is bad for the stock market. Why is it bad? Well, we know that investors wouldn't want to hold capital in stocks, especially when things are looking a bit concerning right now, when the government is promising this guaranteed return that if you put your money in these treasuries, you'll get 4.5%, especially because a lot of these fund managers killed it in the beginning of the year. So far, you know, the big seven, Tesla, Microsoft, Meta, all these stocks, especially Nvidia, rallied up tremendously for the big year. And so with treasuries at these high levels, it's looking like we may see a lot of the fund managers pretty much roll a lot of equities and roll into treasuries. This is actually something I've been hearing a lot on Twitter, where a lot of fund managers are publicly tweeting of how they're salivating at these high levels for these treasuries. In fact, if we take a look at not Tesla, but actually look at the SPY today, and look at it, 5-minute chart, we see that when the treasuries trickled upwards, we saw the S&P 500 index ETF SPY fall down. But I also want to point out to something else I found very fascinating and interesting, is that Fed Kashari recently said that in case of a government shutdown, that means that we don't have access to the usual data. We will supplement that data with the best private data that we have. Now, what does this mean? Well, we've talked about on this channel that we have a looming government shutdown, and if our politicians don't get things together, well, that means that parts of the government will shut down. Now it doesn't mean that everything's going to shut down. Social security checks are still going to roll out. There's going to be some parts of the government that is still functional, but as far as like areas like the Bureau of Labor Statistics, where we get a lot of economic data, well, that means that they won't actually roll out the economic data that the Federal Reserve needs to make their decision on monetary policy. And so he's basically saying, hey, if we don't get the data, we'll just have to navigate in the dark. Now, this is, again, concerning because we've seen the Fed get things wrong even when they had the data. Think about 2021 when they said that inflation was transitory. But then we saw inflation actually was not transitory, and it's still something that we're battling today. And that was with the data. Imagine if the Federal Reserve is now walking in the room in the dark, and they had a candle of light to help them steer the way, but that candle just is about to blow out. It's about to die. Now they have to move through the dark. Pretty scary, right? Now let's actually take a look at the economic data rolling out. So we actually have some good economic data, or not good, but because we can't put any category to it. But what I'm saying is that we have good news that we have economic data that's going to roll out before the government shutdown just in time. So for example, I said we want to pay attention to the weekly initial jobless claims that comes out because this is going to give us an idea of not unemployment. This is just people filing for unemployment, okay? And so that's something that we're actually going to be able to get. And of course, we're going to have Fed Chairman Powell speak on Thursday at 4 p.m. We're definitely going to want to hear if he continues with a hawkish rhetoric or he's going to have a dovish tone, right? We want to hear, is the Fed still going to be aggressive or are they going to change your tone? And so we get that coming out on Thursday, but more importantly, the last piece of data that we know definitely confirmed that we are getting before a possible government shutdown is going to be September 29th, Friday, where we get the PCE index. Now, I've said a ton of times on the channel that the personal consumption expenditure report is basically an inflationary gauge. In fact, it's an inflationary gauge that the Fed actually prefers to look at in regards to this and CPI. And so we're going to have at least an idea of where inflation is. And more importantly, we're going to want to pay attention to the core PCE because we have been seeing energy trickle up with oil. And of course, food and energy are volatile. They could be manipulated. I mean, think about what Russia is doing along with the Saudis to stifle oil production, which is the reason why we're seeing energy trickle up. That's why when you go to the gas station, you're paying these high premiums, right? And so basically, we want to not really pay attention to the headline inflation, but actually see what the core inflation is looking like. So at least this could give us a better indication of, hey, is the Fed actually going to hike again soon, or will they continue with a pause and get closer to actually cutting rates? Now, I believe that it's most likely that we won't actually start getting rates cut until the election year. Think about it. No sitting president wants to have an election coming up and rates are still high. They're going to want to cut. I mean, that's just politics at its finest, right? But what's scary and concerning is that after September 29th, guess what? We could possibly have a government shutdown on October 1st. And what that means is that we're going to miss out possibly on some data. Now, we're still going to get the ADP employment numbers because this isn't with the government. That's the good thing. This actually is the private job numbers. And so we're still going to get that. And that's good. But we possibly may not get the JOLTS data, which is the job openings. And that's something that the Federal Reserve has really been paying attention to, as well as the government job numbers. And so that's why a government shutdown really wouldn't be good news. Now, I want us to take a look at what we're seeing the future markets price in. So far, we've seen that the future market is pretty much calling the Fed's bluff that they will hike one additional time at the end of the year. For November's meeting, we see that there's an 82% chance that they're going to pause and that there's an 18% chance that they are going to hike. In fact, this number has been going lower and lower. And if we actually zoom down, we see that just a day ago, right, it was pretty much at, look at this. This is actually pretty interesting. So a week ago, we actually had it at 29%, the possibility of a hike. 1 month ago, back on August 25th, there was a 46% chance that markets were predicting a hike or pricing in a hike. look at how far down it has come, from 46 to 29 to 18, now at its current state of 18%. And so we're going to possibly see this actually go lower unless we get bad data from the PCE report. If that data comes in hot, well, that's going to most likely spook the markets, and we're most likely going to see this increase, especially if we have a government shutdown, as we don't know what's going to happen next, and the Fed is going to have to move in the dark. Now, looking at Tesla stock again, one thing I do also want to put a reminder is that we do finally get an update on what we're most likely going to be seeing for the fundamentals for Tesla, where possibly next week we are going to be getting the quarterly delivery numbers for Tesla, and that's going to be something that we absolutely want to pay attention to. Now, right now, it's not looking good. Now, this makes sense. The estimates are pretty low, and that's because we know that sales in China have been declining, right? I said personally a week ago that it's probably because the Chinese market is anticipating to just wait off on buying a new Tesla Model 3 and buy the refresh model, but now we're getting news that in China, that's not necessarily the case, and we're actually seeing things kind of slow down in China, and also the exporting from China to these European countries being stifled by sanctions. So not looking good. But we also know that Elon Musk in a previous earnings call had also mentioned that, hey, Q3 production is going to slow down because we have to update our factories. So we could possibly see Tesla continue to go down even further, but this may present a great opportunity for long-term investors. As I often say, I am a long-term bull for Tesla stock. I've been investing in Tesla since 2017, but I also trade Tesla in a short-term account, separate account, completely different from my long-term portfolio, and I trade the fluctuations in price. This way I could hedge my long-term portfolio. And so if we see Tesla continue to go downwards, especially at these areas, well, that's a moment where I'm going to be rubbing my hands to short Tesla. This way I could hedge against my long-term portfolio. I mean, there's several ways to play the market. Some investors like Warren Buffett will sell the calls so that they can make money on their premiums as the stock is going downwards. Some other investors may just buy puts as an insurance on their long-term positions to really hedge. And I personally just like having a trading account where I just trade the small movements daily, and then, or every other day if there's no opportunities. This way I hedge my long-term portfolio. But if Tesla does continue going down, I'll be gladly shorting Tesla. I know this sounds terrible, but again, you have to remember, I'm still bullish. I'll definitely take advantage of Tesla going down. But once we start seeing that confirmation of an uptrend, I'll definitely keep you guys updated on when I actually think I'm going to be pulling the trigger to buy more Tesla. Remember, in the past, in previous videos a few months ago, I talked about how the earnings for Tesla was terrible for the last quarter as we saw profit margins compress, and the markets did not like that. And I said that Tesla was going to fall down all the way to these early 200 price levels. Now, when I said that over here, back in 717, I looked like a crazy loony. In fact, if you looked at the comment section in those old videos, people told me I was ridiculous. As Tesla started coming down, all of a sudden I seemed less ridiculous. After Tesla broke below this area, I seemed like a genius. As Tesla came down, I said, hey, look, we want to pay attention to this area. And I pointed out why specifically this area if we actually look at previous price action, but I'm not going to go that far off in the back. But I said we wanted to pay attention right over here, and long and behold, we saw demand with the buyers come in. We saw a confirmation of an uptrend. I added into my long-term portfolio, and for some reason, I was seen as a genius for the markets. But I want to give you guys a reminder that, look, I don't have a crystal ball, although it's fun to make that joke. A lot of you guys like commenting that. I don't have a crystal ball, right? All I simply do is for my long-term portfolio is when things are selling off, I don't buy every other dip. You hear a lot of market pundits even, or a lot of just people on Twitter and or finance YouTube just saying, oh, well, you just got to buy the dip. Look, I don't personally like buying the dip, because I always say the dip can get dippier, which is a term that I coined, but a more familiar term is that you don't want to catch a falling knife in the stock market. And so when things are selling off, I let it do its action in my long-term portfolio. But once we see that confirmation of an uptrend, and I have separate videos identifying how that is, or you could join the Push and Profit private group where I have video lessons explaining that as well. And you have access to our private group where I also give notifications on when I'm pulling triggers on to buy and sell. I went ahead and I bought in right over here, and Tesla started moving up. I said, hey, look, things are getting kind of iffy. We may reject, and we're right here falling down. Now, you may ask, well, Justin, if you seem bearish on Tesla currently, how can you be bullish? Well, we're seeing the EV trend continue to grow. And Tesla is, again, still in the lead with the market share as far as EVs go. And recently we've heard that Ford had to pause on their, pretty much their missions or their projects to build the infrastructure for their EV vehicles. And so that means that they're going to be further delayed. These automakers are so far behind, and they're still having to sit even further behind. And so that means that, yeah, right now things are not good for Tesla. But of course it's not good for Tesla. We're not in a great environment. I mean, when you see auto loans at 7 to 8%, even with stellar credit, I have a 820 something credit score, right? It fluctuates 25, sometimes 27, whatever the case may be. If I had to finance a new car, it would be just insane, the interest that I would have to pay financing that new car. We're not at a good environment. When Americans are, even with a salary of 150,000, surveys are saying that people are living paycheck to paycheck. That's not good. We also have student loans having to be repaid, and we know that 45 million Americans have a median student loan payment of an additional $343 a month that they're going to have to average into their budgets, and that's, again, going to put more stress on the consumer. I can name 20 other reasons why right now is not a good situation. And so although I'm bullish on Tesla, I can't be oblivious to what's currently going on. There's a lot of zealotry in regards to Tesla. A lot of people look up to Elon Musk as a hero, and of course I think that he has done extraordinary things, but we also have to understand that there's some limitations where, yeah, if the economy is not good, Tesla can only do so much to perform well. But that doesn't mean that it's going to last like that forever. We know that the market is cyclical. Things change. And we know that historically, for election years, if you're a president, how do you want to win an election? Well, people vote with their wallets, okay? People don't vote for, your policies. Believe it or not, that's that's not what people vote for. People look at their wallets and they say, hey, you were not a good president, or you are a great president. And so as election year comes out, what do presidents tend to do? Well, they put pressure. We see this historically. I mean, I have great books that I could recommend where you see this time after time again. You see presidents like President Nixon, and I mean, so many times presidents have pressured the central bank to be like, hey, you guys need to cut, or else you're going to could possibly lose your job. And I know they try to say that the central bank is independent. That's not necessarily the case, but I'm not going to talk about that in this video. But we know that rates are going to be getting cut soon, a little later than expected, but soon. And so we're entering into an area where the buying opportunity soon may be here, and if you're a bull, you're going to be rewarded for your patience. It just takes time. It doesn't just happen overnight. I mean, I've been investing in Tesla since 2017, long before Tesla was even pretty much, what's the word I'm trying to think of, profitable. But I saw the trend for EVs. I really liked the idea. I saw the trend. Imagine the people who bought even before me. I mean, if we look at even before me, look at the people who bought in 2013. They're just sitting on mountains. I mean, the chart, you have to switch it from a linear chart to a logarithmic chart just to actually see what's going on, or at least zoom out very far. But I may be getting too technical over here. Let's just end this video right over here. I want to hear your comments in the comment section below. What are your thoughts on Tesla in the long term as well as in the short term? And with that said, make sure to watch this video right over here where I break down an area to identify confirmation for when to buy. With that said, I'll see you guys on that next video, and take care.